What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, Bitcoin is still just hanging out in this area. We're still technically in the range between around 60,000 to sort of 72,000, but we have been putting in lower lows and lower highs. Now, obviously, you can take the bullish perspective that we're putting in some form of a bull flag, which would have a, massive target up around 90,000 plus or something like that. Or there is some fears that something else could be transpiring. And what I'm talking about specifically, I'm sure you've probably heard this word 1,000 times, is stagflation. You could see that there are fears that we could have potential stagflation in the US, which is something that we really haven't had since the 1970s. And while it wasn't really the greatest time to be around, I'm sure you may have seen the charts and the stories are, we can really just roll some clips of what's been around the news recently.
GDP, first look, first quarter, a disappointment.
The annual rate, 1.6% between January and March. The expectation was 2.4%. This is a much lower than anticipated number.
We were expecting stronger growth. As you said, lower than expected.
If we look at the price index, it's higher, 3.1%.
The consumer is slowing down. Inflation remains high.
How do you spell stagflation? Weaker growth, higher price action?
The worst of both worlds, really. The stagflation conversation perhaps back.
Yep. Stagflation is not a headline that Biden is going to want to see.
Jamie Dimon warned of the risk of stagflation.
This is what you call stagflation, and potentially, I hate to say that we're there, but when you have a slowing economy and at the same time you have increased prices, it's not a great place to be.
So there's no denying it that we have seen sort of the S&P, traditional stocks, for example, kind of struggling. Bitcoin has also had some downwards pressure. In fact, if you want to be transparent about what's going on with the ETFs right now, even they've slowed down a little bit, right? We haven't seen as much inflows recently. So could this all have something to do with these fears of the lack of rate cuts and the economy slowing down, right? Is that just what we're seeing? Well, what's quite interesting is that Bitcoin is giving us some very interesting signals. In fact, if we look at what the Bitcoin whales are doing, they could be giving us a very big clue as to what could potentially be happening moving forward. So I want to talk about all that today. Very interesting video. And also I want to end on, again, a massive sector in crypto that I think a lot of people are overlooking. There's these talks about, crypto and Bitcoin moving to TradFi, right? But is that really what's happening, or is traditional finance actually moving into more of decentralized finance? So we're going to get into all that today. If that sounds good to you, you know what to do if you guys are not subscribed. And of course, friendly reminder, guys, that the Blowfin campaign has been extended to May 10th. So if you do still want to jump in on this, you can get up to a $3,500 bonus. And also, I wanted to give a shout out to Levex because they just unveiled something super cool. They actually have exclusive content now. So what I'm going to be doing is I'm going to be posting, and this is totally free, by the way, you guys don't have to pay for this. They're going to have an exclusive content tab. So I'm going to be posting things over there that I'm not posting on Twitter and I'm not posting in the Telegram group. So if you want exclusive access to that, like I said, it's absolutely free. You don't have to trade, you don't have to do anything, but you do have to sign up using my link below in the description, and then that will automatically add you guys to my exclusive content list. So if you guys want more Crypto Zombie content when I'm not on Twitter or I'm not on YouTube, you can sign up with Levex. Like I said, you don't have to deposit, you don't have to trade, but you will get access to my exclusive content over on Levex. So moving on, let's start right here. So according to Monday's QCP Capital report, there are some worrying data that has come out in the US with a weaker than expected GDP print that points to a more sluggish economy, while the higher core PCE warns of an inflation problem that continues to be a thorn in the Fed's side. The report added that if the US GDP continues weakening and inflation remains sticky, that the US might go into a stagflation scenario, a combination of negative GDP growth and high inflation, right? Now, just to put this in a perspective, you could see when we had this right here, predominantly sort of between the years 1974 to 1976 with the big oil shock that we had back in the 70s. So I am going to touch on that in just a minute, but you can see that they say despite the macroeconomic uncertainty, they do see a potential for 1.4 trillion liquidity injection in the US economy, and this could be a main driver for continued bullishness into the end of the year. And before we go on any farther, I just want to point out that first of all, they've been calling for this doom and gloom scenario literally for the past 2 years. Nothing has transpired yet. While everybody was bearish when Bitcoin was down at $16,000, we were very bullish on this channel because we know what ends up happening. They turn on the money printers. It's pretty simple. You either start printing money or you literally let the economy crash. Now, there might be some conspiracy theorists out there that say maybe that's what they're going to do. I don't know. Most likely, Jerome Powell doesn't want to go down in history as the guy that crashed, the whole country. So I don't see that as a plausibility. I see more that they're probably going to just maintain these rates higher. Another rate raise I don't think is in the cards, but what do I know? I'm not an economist, but I will say it is quite unlikely. So, again, just having a look at this area back here. I got to go back a little bit farther. So this area right here is a, sort of when we had that stagflation back in the 70s between 1974 and 1976. And I apologize if the wind is in the microphone. It wasn't windy when I first came out. But you guys could see down here that was about a 50% drop in the S&P, right? So that would be pretty catastrophic if we had something like that happen. What would that do to Bitcoin? If the stock market falls 50%, is Bitcoin just going to zero? Well, that's kind of what I want to talk about because there are some very interesting things to consider. The first thing being that we do have a Bitcoin ETF in Hong Kong right now. And like Willy Woo pointed out, if you look at the number of cryptocurrency users in different regions in the millions, we still, look, North America is only down here, right? So we're like the third largest, but really Asia is, blowing this out of the water. It's almost 3 times as many, right? So this is going to lead a lot of capital. Now, I have seen reports saying that the spot ETF in Hong Kong is not going to be a gateway for mainland China investors. But come on, guys, you really think they're not going to figure out a way to get around this? We already have massive volume coming out of China. They've had that ban for a while. What did that do for Bitcoin price? Nothing. It shocked it temporarily, and then they were still able to gain access to all of these products, right? But this is where it gets interesting, and this is the data that I want to show you guys. So if we have a look at what the Bitcoin whales tend to do, you can see that they accumulate heavily. These wallets grow, and these are wallets with over 1,000 Bitcoin, or at least multiple wallets that we can connect to each other, saying that this is the same entity. Now, let me just preface this before I show you the chart again. We could be in a situation where the whales are getting smarter, right? They don't want to put 1,000 Bitcoin in a wallet, right? So the data might be a little bit skewed. Maybe they have multiple wallets. Okay, so take this a little bit with a grain of salt, but I think the overall trend is pretty much apparent. And as they are accumulating up in these ranges, you could see that that is when the bull run stays intact. And yeah, we can have 30%, 40% corrections, but it really only isn't until they start to slow down and go the other way that we start to see these tops, right? And even right here, we had a little mid-cycle correction, but really they continue to accumulate, right? We had something very interesting here. You could say that 2017, they started to offload a little bit halfway through, but I think the main thing, and you can see right here, they did it straight to the peak, but the main thing I'm trying to say is that when you have an upwards sloping trend, okay, and the trend is going upwards, that tends to tell us that we're not anywhere near the end of this market. And, if I could just zoom in right here, I think you guys could see right above my head, this is basically going up in a straight line, okay? We haven't even begun to start to turn over yet. So this type of accumulation, especially from these whale wallets, again, is something that you really see more in the middle of the bull run, right? You don't see this at the very end. You don't see this at the very beginning. You see this during the middle, right? So this is kind of telling me if the whales were really freaking out, wouldn't we see this curving the other way? We wouldn't see more whale accounts accumulating at these levels, right? That's the first thing. The second thing, if we look at the Bitcoin Power Law model, this is also over on Glassnode. This is just basically a very simple relationship between time and price, right? And yes, we can dance below it. It can act as support. It can act as resistance. This has nothing to do with what the price of Bitcoin, should be on any given day, but as you guys can see right here, in all instances, even if you want to go to this fake out that we had right before COVID, a mid-cycle correction, whatever you want to call it, they always at some point peak above this line. And if we look right here, we're basically just dancing around on the power law area, right? So this is suggesting that we're kind of, again, just in the middle range, right? We're not under it. We've been under it for quite a long time. And generally, once we break above it, we tend to spike price pretty quickly. The other thing that you can look at is a combination, and the reason I'm going over this is because I know people think I've been bearish, which I'll get to the charts in a bit. I was talking about potential for some downside action, which we're obviously getting that as I'm making this video. But, you know, you're not really into the overheated area. In all of the CBBI, which combines Pi Cycle, Top, R HODL, Puel, etc., 2-year moving average, it's basically a basket of indicators. You could see that you don't really have that confidence of the tops until you start getting well above the 90 area, right? Into the 92, and of course 100 is you're at the peak. And our peak that we had over here was really only about 80 to 82. So yeah, you could say, okay, it's getting a little hot, but you know, we've been in these levels before and still had months of the bull run left to go. So this is, again, not suggesting that we have reached a top yet. It's suggesting that we are in a cool off period within a larger move to the upside. I mean, just having, I had a long alert come on here. Just having a look right here, you know, what we're doing is we're having a downtrend, okay, in an uptrend, right? And this is healthy. It's okay if we have that correction. You know, I've talked about coming down and retouching the bottom of this area, and yeah, it's possible. It's not, it doesn't mean it has to happen. I mean, currently we found support on the upwards heart line, right? You know, it could be, you know, just a rough, you know, consolidation in here, and maybe we do break out to the upside. But the reason that I was saying I was a little bit cautious was because the stochastic RSI down here usually doesn't signal a reversal until you have these moving averages cross over, right? You can see right here, right? That's when we had a bounce right here. That's when we had the bounce, not when we were in the middle. When we were in the middle, we were going sideways or going down. And currently, I believe we're closer to ending this move than starting it. So obviously time is on our side, and as time goes by, the longer Bitcoin stays in this area and doesn't have a massive move to the downside, the more likely that you're going to have a continuation. And I think we're very close. So, you know, maybe the worst is behind us, but it doesn't mean we couldn't have a quick move down to some of these Fibonacci extensions or retracements, depending on how you're looking at it. So, you know, the 0.786 is sitting at around 57,000. But remember, guys, as soon as we break out of this range, you basically go into price discovery, and that has our next area at around 102,000. So basically, in a nutshell, to sort of summarize this, right, there is that possibility that Bitcoin does continue to bore people, maybe for another week or so, and we could even have a correction. Who knows? We can have a liquidity grab down to 50,000, down to 48. I don't think we'd stay there very long. I mean, unless you have a buy order set there, I wouldn't be trying to time the markets and catch that move. I would imagine it would be bought up very quickly, the way that all these other dips have been bought up. But after that, it's basically signaling blue skies to 100,000 or higher, right? And that's a very realistic approach. That's not like Moon Boy. It's just a very realistic approach, and it would be very healthy to build that base for the markets overall, right? So this is where I wanted to sort of end today's video. So we had the big news about BlackRock starting to have these real world assets, RWA tokenization. This is on the Ethereum network. And they said that the giant is also making strategic investments in asset tokenization company securities, right? And this is really what brings me again to Swarm. This is a project I've actually been incredibly bullish on. They've been in the space for quite a long time, back when it was called tokenized securities. And this guy, Timo, I had an opportunity to speak with him. He has experience as a fund manager and led the U.S. arm of Behringer Finances as an M&A advisor under SEC license. And again, you know, these guys are OGs in the space. So I thought it would be really cool to bring Timo on the channel and have a quick discussion about real world assets, because I think people have it backwards. I think they're like, oh, we're seeing things like Bitcoin and crypto going mainstream, so that means that they're getting more into the traditional finance area. I actually think the opposite is happening. And I've been talking about this on the channel for actually a few years now. The idea of tokenizing real estate, right? Owning equity in a company. And let's say you could just completely bypass the banks or whatever, you know, and you could have that money go directly into your MetaMask, right? And you could have an NFT or something that says that you own percentage property. Well, these things are actually starting to become a reality. So obviously we're going to talk about all different aspects, swarm markets, what they're doing, you know, tokenization of gold and stocks, and really just the broader view of where this space could go. So without further ado, guys, let's hop into that interview with Timo. So, all right, Timo, it's awesome having you on the channel, man. I've been wanting to actually talk to you, and you know, I've been interested obviously in Swarm. It's something that I've been really noticing lately, especially with the RWA space. BlackRock has come out, so now all of a sudden it's this big buzzword. Now you guys have been in this for a while. I mean, back when they were calling it, you know, securities and all this other stuff, and you know, stable coins, as we had mentioned off camera, were technically the first real attempt at tokenizing real world assets. So I basically just wanted to kind of ask you guys, what is this whole space? What are these things? How are they evolving, and where do you guys sort of play into this?
Yeah, so we started like basically working in this space in 2017, 2018. And I think at the time, like you said, it was called security tokens. And I think like the best example to talk about like what problem we're trying to solve is really like when you have assets that are non-natively crypto. So basically anything like, for example, a stable coin that's supposed to be a value replica of the US dollar, right? So then you always have this tension, like, about the collateral and the backing of those coins, like what's really backing it and how do we know it's being backed? And like that whole conversation has kind of, existed for years, even since Tether started, and then Circle came along and then kind of took a slightly different approach to solving that particular problem. But I mean, tokenized cash was really like the first kind of real example of RWAs that really took off and reached like, I would say like critical mass and momentum. And then now, like you said, like recently, really starting like 18 months ago, when MakerDAO started using like, non-native crypto collateral for DAI issuance, that's kind of when we saw the whole kind of start of the RWA space to take off. And then we saw these US Treasury bonds being tokenized as kind of a first example of that. And then we, of course, then went and tokenized a bunch of, big name public stocks such as Apple, Tesla, MicroStrategy, etc., because we wanted to bring those assets on chain to make them available in like a fully digital environment. So that was the starting point for us. But then, that's only the beginning. And then there's a bunch of stuff to build still.
It's crazy how you guys were able to catch this so early. I feel like no one was talking about this 3 years ago, but you guys obviously saw that this is the direction that sort of we're moving in. I mean, do you think that, because people joke about the whole, well, crypto is going, TradFi, right? Because we got the ETF and all this other stuff. But on the flip side, do you think there's actually a potential that we move the other way? Do you see more of traditional finance coming into DeFi with the tokenizations and things like that? Is that where you see the ultimate movement?
That is exactly it. And I think that, you can almost look at it as an integration, right? So it is an integration of, TradFi and DeFi. And so what happens is basically, like, for example, if you're able to use tokenized Apple as collateral in a DeFi application or protocol just to kind of borrow against it and then do whatever you want with those stables, I think that's a very kind of clean cut and clear use case for why you would want to bring TradFi assets on chain as a very kind of basic primitive. And once you have those primitives on chain, then you can do like all the cool stuff you can do in DeFi pretty much. But there's like a really important aspect to it, which is it has to be like available for retail, right? So a lot of the RWA projects that are out there now are basically offering like things like treasury bonds and so forth, and predominantly to institutional investors, which I think is like, that's great on one hand, but it's not really the problem that we're looking to solve. That's why we explicitly file a retail prospectus for our tokenized stocks, because we wanted to make it like possible for anyone to buy either a fractionalized stock or like, millions of dollars of tokenized stocks. And there's like a full range of things you can buy and do with it. And that was really important to us because it's all about like, creating these possibilities for everyone and not only like a few institutions.
Yeah, the thing that I actually find most interesting about you guys is it seems like a lot of the other products out there are more of trackers. You kind of just track the price, but you don't really have the option for redeeming it. But you guys actually have that as a possibility. How are you able to do that? Like, for example, if I, compare it to something like Pax Gold, I want to redeem it. Do I get a bar of gold? Like, how does that work,
Yeah, so I think, well, exactly. And I think those, if you look at like Synthetic Protocol and Mirror Finance, and there were a couple of like early attempts there. And we always saw that like, okay, that's cool, but it's different from having like a one-to-one asset-backed token issuance. So then we decided to go down the route of like one-to-one backing, which means that for every tokenized Apple stock that we bring on chain, there's a Apple share sitting in institutional custody in TradFi that basically is backing the issuance of that token. So I think that was just like, creating as much credibility and, verifiability as possible for the underlying asset. That was like a very key aspect to what we built. And because we never want to have the question of like, oh, how do I know that thing is there? Like, can you show us that you actually have those Apple shares? So the whole idea is to basically provide like full transparency into the backing of the coins. And then once that's there, well, then you can just start kind of assuming that, okay, so now I have a token that basically represents the economic value of an Apple share, because the next time the market opens, I can sell that share with almost like, unlimited liquidity, because, these big names are trading at such volume. So liquidity is not really an issue at all. It's just the market hours that makes,
right,
the TradFi aspect really different from the digital aspect. But, once we have enough secondary liquidity on chain, then the market hours aspect will almost go away, because then it becomes an arbitrage opportunity for some people. But in the end, for most people, they'll just trade the tokens, and that's all good.
Yeah, I actually have heard some rumors that the New York Stock Exchange is feeling pressure and they may look to do a 24-hour market now. It was just some rumors. I don't know, because I think they're feeling the pressure from crypto, the fact that we don't have hours, that Bitcoin's 24/7. So, and it's a faster economy, now with digital, everything's going digital. For me personally, I actually don't own any stocks. And it really is just because I have no interest in setting up a traditional account. I've been doing crypto for 8 years. So for me, it's actually easier to stay in crypto and do everything, decentralized, or, having my MetaMask, having my assets in my MetaMask. For me, that's actually better. Maybe for other people, that's not the case. But I think overall, like you said, the transparency is a huge problem. I mean, look at the massive crypto contagion that we had last year. And I think it still kind of has people in a little bit of shock. They're kind of scared to touch certain products. Like, for example, I wanted to actually go into this. You guys have like borrowing and lending. But then you see these higher yields and people are afraid to touch it because of what happened, a couple of years ago with the SBF stuff. So, yep. How is your approach to this different? You said obviously very transparent, but how would that work with your borrow and lending, utilizing collateral with you guys, for example? How is your approach different?
Yeah, so that approach is really more about that the collateral is, pretty much non-correlated to what's going on in crypto. I mean, for tech stocks, that's not 100% true, because there's always a macro overlay to all these things. But if you think about the volatility of an Apple stock compared to ETH or Sol or something else that you'd be using as native crypto as collateral on a lending protocol, then of course the tokenized stocks have a completely different nature to them, right? So I think that makes it hugely different from just using ETH as collateral. Even that's why Maker moved away from only using ETH, because if you remember, when we had those 40, 50, 60% drops on ETH, then the Maker protocol basically it almost broke, right? And then they had to recover that situation. And so I think that volatility is really kind of a challenge when you look at things like lending protocols. So I think we're just bringing in a different, asset class that allows you to create more stable baskets that work as collateral for lending protocols. I think that's a huge deal. And once you kind of understand, okay, I can buy Coinbase on chain, or I can buy MicroStrategy, which is effectively leveraged Bitcoin with an operational cash flow on top. That's those are really cool assets if you're a crypto guy, right? So I think that's how I think about it. Is like you said, a lot of people will never get a traditional brokerage account because it's just so slow, right? I mean, the speed at which you can do these transactions, it's instant settlement. It's basically, you do the transactions within seconds. It's all within your control. It's just superior, right? So the more stuff we can bring on chain, the better people will be off.
You said right now you guys have a few stock options, you have some treasuries, some other assets. I don't know if you guys can talk about it, the roadmap, but what are you guys looking to roll out in the future? Because I know you got some exciting things going on.
We do. So first of all, just on the stock side, so the process there is that we have a framework perspective, so we can file in new public instruments within a few days' time. So if somebody tells us hey, we want to bring this asset on chain, we think there's 7-figure or more demand for this asset in the near term, then we can get that on chain within a few days. So that's one important aspect of the flexibility of that structure. The other piece is actually, we haven't launched, but we are working on a really cool solution for gold, which is different from the other gold tokens that are out there. And I don't want to disclose too much about how that's going to work, but we think that it's very kind of similar. It's the physical version of Bitcoin, and you will basically look at it the same way once we launch that product. So I think that's a really cool product, you know, to be coming, like, to be launched soon. That's all I can say.
I mean, being in the Bitcoin space, you can't not hear about gold. I mean, I'm always hearing the comparison. You know, Peter Schiff is coming out saying it's fool's gold and all this other stuff. But I'm the same way. Like, I don't want to buy a bar of gold. I don't, even though they would say that physically that's what you should do. But, you know, I like the idea of, you know, you can go anywhere in the world, take your Bitcoin with you. So yeah, I'm not like exactly loading up on gold bars personally. That's not my thing. But I wanted to talk about the actually the token itself. And obviously we're not trying to shill anything here. Full transparency. I do own some SMT because I obviously believe in the product and I see the value. But as far as the token itself, there was one thing specifically that was interesting to me, is the fact that you don't have these massive lockups right now, you know, with these VCs and stuff, because that tends to put a lot of downward selling pressure. And it's sort of more of a fair, open, no, I don't want to say like super fair launch, but I mean, it kind of was in a way.
Yeah,
you know, you didn't have
100%. And I think that's a really important aspect, right? Because we funded this company from the beginning as a centralized regulated company through equity. So that's hugely different if you build like a protocol that's fully decentralized from day one and you're using the token to fund your project. That's not what we did. So we used the token to create like incentives to get the flywheel going. I mean, always when you're developing new protocols and new decentralized applications, then you kind of need to show people what you want them to do. And using the token is like one way of doing that, by providing basically different kind of incentives and rewards and discounts for things. And then basically just being able to use the SMT token as a payment token on our protocol. So on the decentralized side, it's like a hugely beneficial to have that token out there to be used across the different applications that we have. And it's like you said, and we haven't sold it to any VCs. There's no like massive lockup from, you know, A16Z or somebody else that's just going to come into the market at some point. So yeah, it's just like a different way to build it. And the reason why we did it that way is like, it basically because from day one, the company that's doing the regulated portion of this, not the decentralized applications, that is just a traditional equity finance company where Philip and I funded the first, you know, couple of years, and then we got a couple of external investors in.
Yeah, and on that side note, for anybody who might be concerned, you know, about the regulation, how are you guys currently regulated? Like, what you're working with the MiCA laws? I probably
exactly. So, you know, Europe is coming into this, like, you know, pretty, I would say, reasonably clear environment from a regulatory point of view next year. And so on the prospectus side with the tokenized stocks, we're working with the Liechtenstein regulator called FMA. So they're basically the ones that approve these prospectuses. And then on the trading and custody side, it's all about MiCA, because everybody in Europe is preparing for, you know, January 1st next year, when the whole MiCA framework kicks into gear. And, you know, the theory is that it's going to be the same across all of Europe. We'll see how that plays out. So we actually have a pretty broad view on that landscape right now. So we're not betting on a single jurisdiction for that reason. But, you know, it is going to be comparatively clear in Europe, you know, from a regs point of view. And I think, you know, everybody kind of knows pretty much what's going to happen. Yeah, beyond that, I think there's still some things around NFTs representing assets and some DeFi applications that are still not like addressed within that regulatory framework. That's coming like in like a second or third phase, whatever, we'll see. But so there's still like some room to move around like normal DeFi apps and do the stuff that we're used to. But, you know, in the end, we'll see where all this stuff ends up as well. And I think self-custody has always been a big deal for us. Like, you know, the ability just to hold your assets and control your assets by yourself and then just interact with different applications. That's the like one of the core values, obviously, of using a blockchain. And so, you know, we really want to retain that possibility for as long as possible and not like, you know, get all into managed wallets and that's the only way you can do things, because we want to do that because of usability advantages, but not like for people to lose control.
Right. I mean, I'm a huge proponent of self-custody. I know it's not for everybody. Obviously, the ETFs are providing these people who are not comfortable holding their own assets. But even though you're seeing now more of the traditional space come in through, like, let's say these ETFs and things like that, are you finding, I mean, this is like, we're going on 3 years, you've been really focused on this aspect of, RWAs. Do you find that, is it currently just sort of flavor of the month speculation, token price, like, or are you guys actually seeing real demand? Like, are you seeing demand for the products themselves increasing?
Yeah, it's actually brought like a lot of like legitimacy in some ways when like the ETFs were approved, and then all of a sudden like the whole space gets like a different stamp from a bunch of people who've been sitting on the sidelines. So I think that's a huge shift for this year, and I think the ETFs played a big role in that, including all the statements made by BlackRock and others. So I think that's been a really good positive like force for us in the RWA space, because basically us and Ondo and Centrifuge and some other projects have really benefited from that. So I think it's like overall it's just like created a better environment for RWAs in general, even if it's not like exactly the same thing. It's actually just like providing more positive pressure on the space. So I think that's been hugely beneficial for us. And it's just like having people like Larry Fink saying that all the assets are going on chain, and it's like, yeah, we've been saying that for 3 years, but when he says it, it's kind of different, right? So
right. Well, I've been talking about Bitcoin and crypto for 7 years, but of course nobody cares until they start talking about it, or until some billionaire buys it or something, and then it's legit, So it is what it is. I think we're still relatively early. People in the space right now, you could tell watching these videos I see in the comments, it's like, oh, it's too late, I missed out. It's like, you're not late, guys. Do you understand most people are not even thinking about this stuff, like not even thinking about it. So, yeah, I mean, I guess we can kind of, wrap it up here if you want, but, is there anything you kind of just want to leave my viewers with, or just kind of in general, where do you sort of see this going? I mean, it's not going to happen overnight, obviously, but in general, just what are your thoughts on it?
Well, I kind of see it as like, when people start using this stuff and kicking the tires, and they actually see that, you can do these transactions within like seconds with instant settlement for what would be normally like a 2-day transaction on a traditional brokerage account. And then you start like mixing like the tokenized assets that we have together with your crypto. And then all in the end, it's like, it's no different. It's all within the same wallet. It's all using the same decentralized applications in the end. I mean, that's almost like, that's the aha moment that I think people need to have. So basically go there, go to the decentralized OTC protocols, buy some tokenized Apple stock or MicroStrategy, what have you, whatever you like, and then just kind of see how it works. Because I think that's just like, that's the right starting point. And once you do that, then you kind of see, oh, now I can apply this to a lending protocol, or that's pretty cool. Or I can start building like a portfolio that has a mix of MicroStrategy and a bunch of other things in it that it wasn't accessible if I was only a crypto holder before. So I think those are the things that I want people really kind of do and pay attention to, because that's quite eye-opening.
Yeah, just dip your toes in the water, try it out and just see how it goes. And I think that once people start using this, they're never going to want to go back to the old way. I don't even want to go. I'm not even, like I said, I don't even own any stock, and people think I'm crazy. They're like, you don't own stock? I'm like, I don't want to deal with it. I don't want to have a Robinhood account where they're closing it and shutting it down and telling me what I can and can't do, and then I can't withdraw my assets, or it's cash settled only. Like you said. And that's sort of the thing. I don't want to go on a tangent here. The ETF is all right in the US, but it is all, cash in, cash out, which is great for those people. But I prefer to be able to hold that asset, and have actual ownership over it legitimately. So I think that's why you saw this a few years ago. And, I've heard of lots of projects. I get everyone's talking in my ear, this and that. But when I found you guys and saw what you were doing and realized, especially, I love the fact that equity raising, I think that's amazing. It's just, for me, it's a little more legitimate compared to some of these other raises. And I just really think that you guys really are out in the forefront. So yeah, I mean, for anyone watching, we're just talking here. I wanted to get Timo on to just have a little bit of a discussion. But yeah, check out Swarm Markets. I think they're doing big things. And yeah, I'm really super excited to see where this goes. Very, very excited to see what you guys roll out, even though I know you got to keep a little bit under wraps. But I think people should just go check it out and try it for yourself. So thanks so much, Timo. Great having you on, man.
Thank you. No, awesome to be on here. Thanks.
So that's it for me, guys. Thank you so much for coming back to the channel. Obviously, nothing is ever financial advice, but it is a project that I am very bullish on. It has a real-world use case, and I do see potentially bright skies ahead for Swarm. So again, guys, you know, do your own due diligence. You know, check the platform out if you're interested. Maybe just mess around with it if you want to just see what those guys are doing. But ultimately, that is it for me. And a friendly reminder again that Meta Signals actually has recently been getting a lot of attention. We've had a lot more people join the group, and we have about 30 NFTs left until the price increases, and we are going to look to roll out that US dollar tier if you guys are interested in that as well. But ultimately, that is it for me today. Thank you so much for coming back to the channel. If you guys want to learn how to trade, you can watch my tutorials here. Check out those bonuses below in the description. But until next time, stay crypto, and of course, peace out.